Good morning. This is Larry McMillan with the stock market update on Monday, May 1st. So last week we had a big strong rally the last 2 days of the week, and it pretty much erased some negative things that had been going on. But it sort of returns us to just where we were in mid-April, trying to break through 4,200 on the upside. And so far that's been not achievable. And so that's still major resistance right there at 4,200. There's also resistance at 4,300. I guess the positive thing is that last week's lows were in the 40-50 area, so that is definitely support. It had been support earlier, and now that's been reinforced. So that's a pretty tight range, though, between 40-50 and not even quite 4,200. So we're probably going to break out of here in relatively short order. The McMillan volatility band buy signal is still in effect. This movement that we had last week has increased realized volatility. So we spoke about a realized volatility sell signal. That's still in place, at least for now. And it will be as long as the realized volatility of the S&P 500 remains, well, modestly elevated from where it was. The equity-only put-call ratios, they're also on sell signals. They did not budge despite the rally late last week. And we consider that to be one of the more important intermediate-term indicators. On the other hand, breadth has now rolled back to a buy signal. It had been very negative, probably even too negative, got oversold, and now we exploded to the upside. Breadth was very strong on both Thursday and Friday. And so that gives us a buy signal in breadth. But frankly, the breadth oscillator signals have been just so subject to whipsaws lately. We're not really using them to take positions, at least at the current time. New highs versus new lows. This indicator had rolled to a sell signal last week, but it appears like that's going to be canceled out as well. So this indicator is returning to neutral status. VIX continues to drop. Now it's down to the levels last seen in November of 2021. During 2021, VIX bottomed at 15 several times, so we're approaching that level now. If we fall below here, it really is an indication that the big money is not worrying about the market. And it really would be sort of a bullish thing, but it hasn't happened yet, so we'll just keep an eye on that. Meanwhile, the construct of volatility derivatives is modestly bullish in that the term structure of the VIX futures and of the CBOE volatility indices, those term structures slope upwards. We do have a couple of volatile events on the horizon this week, the FOMC meeting and the unemployment report due out on Friday. So that has caused some increase, a little bump in the term structure of the CBOE volatility indices, but nothing serious. So overall, we certainly have a bag of mixed indicators right now. And until S&P can get above 4,200, though, I'm certainly not going to take a core bullish position. You might toy around with selling some things around here and trying to cover if the market moves lower using 4,200 as a stop. But we are definitely trading off our individual indicators. So I invite you to visit our website to see how those line up on a day-to-day basis. We've been getting a lot of different signals from those. And meanwhile, have a great week trading.